Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Tornado Global Hydrovacs, innovation over imitation. This is probably one of the coolest investor deck slides I've ever seen. They produce Hydrovac trucks, no surprise, and they trade on the TSX Venture Exchange and the OTCQX. So you really need to understand what a Hydrovac truck is to invest in this company, and this is a Hydrovac truck right here because this is what they do. This is their one business strategy, is making these Hydrovac trucks.
Hydrovac excavation is a non-destructive, safe, and fast method of excavation. It is ideal for use in exposing buried utilities and other infrastructure.
Call before you dig. Why do you have to do that? Because you can hit critical infrastructure.
Workers installing a telecommunications line bored through a 2-inch gas main, resulting in a leak which migrated underground and into an adjacent home. Gas company workers had been on the scene for approximately an hour, attempting to find and fix the leak when the home exploded.
There is some excitement because of this 2021 U.S. infrastructure bill, as well as the 2022 U.S. Inflation Reduction Act. So there's supposed to be a lot of spending on infrastructure, especially in the United States, over the next little while. And I mean, this is great news for Tornado. Down to the numbers a little bit more. 241 trucks produced in 2023. Currently, their facility has a capacity of 300 plus trucks per year. And they're selling these trucks everywhere. 41 distribution locations across North America, but more exciting, they just signed with Ditch Witch, a 4-year renewable strategic supply and co-development agreement for the delivery of trucks with an additional 135 locations across North America. Now, before I look at some of the numbers that the company is going to give us, they want you to read this disclaimer. And my disclaimer, this isn't financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. I just like talking stocks, and I like creating a little bit of awareness for some of these companies that don't get a lot of coverage. So please go do all your own independent research after this video. What the company is showing us here is revenue and EBITDA expected for 2024. And you could see significant straight line growth up in revenue. Also, adjusted EBITDA is moving up to 13 million expected in 2024. This is based on the number of trucks. So you can see their truck production, 143, 241. As they gain more of these resellers, they are selling more and more trucks, 280 to 320 expected this year. Good, consistent growth and profitable. A little more visualization into their numbers, as on this chart, green is up and red is down. So you can see their total revenue here, up, 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 up. They did have a little bit reduced operating income in the year. They're still producing significant operating income from quarter to quarter, but it was down from a very high quarter at the end of 2023. It's still looking good. And again, you can see this exponential growth up and profitable growth, as green is revenue and the red, yellow, and orange is expenses. So revenue above expenses, and continuing on that trajectory is their Q2 results, which are not on that chart because it was just released August 21st. The company achieved record quarterly sales again. They're saying it's the 9th consecutive quarter. Net income per share of a little under 2 pennies, fully diluted, 125% gain in earnings per share, and then EBITDA per share is up 85%. But with revenue going up consistently and earnings going up even better than revenue, one thing you will see in their share price is not much, right? Back here in April of 2024, they saw exponential growth as this company was a little bit discovered. They had really good profitable earnings. But since that time, it's been really flat share price growth. Despite Q2 coming out and showing those improvements, share price did not go up. And let's look at what you get when you buy a share. So trailing 12-month revenue of 128 million, market cap of about 138 million today. So price to sales valuation isn't very high, sitting at 1. That's a little bit surprising considering you look at some of these numbers. 46% revenue growth, and again, quarterly earnings growth even much, much higher at 138%. 137 million shares outstanding, but I mean, 44% of that held by insiders, making a much smaller float. They have some cash, a little bit of debt, but they're also producing more cash. Let me know what you think, whether or not this looks good to you. For me, this is typically what I'm looking for, right? Revenue trending up, yes. Earnings trending up, yes. Cash trending up, yes. ROIC trending up. Go take a look. It is. Valuation trending up. It had that one big bump earlier this year, but it's not consistently going up. It's basically flatlined. So investing is not a snapshot in time. We're looking at the historical trends and predicting the future ones. One of the main questions I have, and I'm going to contact the company with this question, and if you want to continue researching Tornado Global Hydrovacs, I do have a paid Patreon that I will link to down below in the comment. But they're saying that their current facility can build 300 plus trucks a year. 300 plus to how many? Because they're expected already this year to potentially deliver 320 trucks. So how many trucks per year in sales can this company grow to? When are they going to need a new facility? What's next after these 2024 expected numbers? That's my question. You've been watching Common Sense Investing. My name is Cameron. As always, thank you for your time.